Wells Fargo Chief Economist John Silvia. He's with us, and Newoak Capital President Jim Frischling. Jim, first to you. Have you been gingerly wading in, jumping in with elbows, or sitting back and waiting?
Well, look, I'm glad you mentioned the global equity market losses going back over $2 trillion, which is, again, the biggest of all time. And yet, all the comparisons to Lehman, we don't see this being the same financial crisis. This is a crisis of leadership, a crisis of confidence. This is not an over-levered, bad, toxic asset crisis. So to your point, we do think there are opportunities, and actually some of the things we're looking at are a little bit being more domestic-centric right now. Okay, I woke up today, all the things I spend money on and all the people in my company, we continue to spend. So as far as we're concerned, there are things to look at, and if the baby's going to be thrown out with the bathwater, which is what this extreme volatility and this downturn has just showed us, we do think there are going to be opportunities to pick up some very good companies. This may be the pullback that you're looking for. So I'm not trying to be a hero, but do not think this is the same as the onset of the financial crisis.
Okay, great. And we don't have capitulation yet. I think that's pretty clear. That's when everybody's so-called throwing the baby with the bathwater. Yes, the market's coming back. Charlie, I'll get to you in a second. To John Silvia. If business confidence temporarily starts to get shaky in the UK and then companies stop hiring and that tends to reverberate across the pond, do you see us, John, going into a recession even for one quarter or two?
No, not in the U.S. I certainly agree with the comments earlier that the U.S. domestic economy is actually doing pretty well. The consumer and housing are doing pretty solid growth numbers. The challenge, of course, is business investment. When businesses are uncertain about the future, they'll pull back a little bit from business investment, structures, equipment spending, software spending. That, I think, is probably a little bit more of the weakness we might see, as well as net exports. But the U.S. economy still doing 2% or so economic growth.
Charlie Gasparino's written a book on ratings agencies and how wrong they've gotten it over the years. S&P today, the first, as I said, to go down the rabbit hole, cut the UK from AAA to AA. Moody's has said they got their finger on the trigger. They're waiting. They've got it on credit watch negative. Markets were already down. They didn't seem to take any gap down further on that news.
Yeah, I mean, I would just say this, Liz, Moody's and S&P, they're going to have some impact on the markets, but broadly, they've been wrong about so much when it comes to, predicting the future, even being even like coming close to getting something of magnitude right. We should point out that the financial crisis is where I really wrote about them, how they missed that, and in many ways, we don't have to relitigate it all, but they did kind of foment it in many ways. Make 2 points. The market looks like it's coming back a little bit. It's finishing stronger than it finished, obviously, the other day on Friday when it was a complete and massive bloodbath. But the other thing is this, and here's what I don't know. Brexit in of itself should not really be impacting U.S. corporate earnings or even like the U.S. economy in a major way, because Britain, even if they do have a slowdown before they get their acts together and figure out what type of fiscal stimulus they're going to do, a fiscal policy, is not that big of a trading partner. It's just not
our seventh largest.
Right. So we're not totally tied to them. That said, the U.S. economy is growing pretty slow.
Okay.
And there is a theory out there that, just this little bit could push the U.S. economy even slower growth, which has a whole bunch of ramifications, including in this presidential election.
Right. Jim Frischling, I was trying to look on screens across this floor to find something in the green outside the U.S. and the United Kingdom. Some telecoms in Japan, okay? Nippon Telephone and Telegraph, NTT, Docomo, they seem to be okay. Do you start to look in far regions of the world and see if there are other opportunities, or do you stay domestically here?
Well, I would love to mix up with both Charlie and John, but I'm in agreement with them. John talked about the consumer here at home and housing, and I'm actually, I am looking domestically, and I like both those sectors. I talked about regional airlines such as Southwest, which is love, and everything they're doing to really be consumer friendly. And then I know the financial sector are things no one wants to talk about. I've already been a fan of Wells Fargo. I'm on U.S. Bancorp. Again, their housing portfolio is 43% of the loans they make, and we think they've got a very strong portfolio and a very good management and dividends, and with the low interest rate environment, expect more buyback. So we're going domestic-centric and trying to use this as an opportunity to pick things up.
Check this out. With 3 minutes to go before the closing bell rings, we got 2 names on our Dow heat map that are green. We'll look at Johnson & Johnson, again, up tiny bits, just a fraction here, and Verizon moving higher. Everything else in the red. John Silvia, what do you think the Fed does now? Peter Schiff just said, forget just stopping the rate hikes. We may see a rate cut. Do you think the Fed takes back that quarter-of-a-point rate hike that they instituted back in December?
No, I don't think they take it back, but clearly they're going to be on caution watch. Probably at this point in time, not even moving in September, but perhaps in December. We'll look at the data, but the economic growth going forward should be okay. The inflation numbers stay low. There really isn't an incentive for the Fed to aggressively pursue anything like the federal funds rate path they have put up in their dot plot diagram.
Yeah, I'm looking at the Dow, and by the way, Charlie, we had been down 338. We're down 261. A little bit of a comeback. Give me 20 seconds here.
I still think the Fed has another reason just to wait and not raise rates. You know, they shouldn't be doing it during a presidential election year. Anyway, I think that's the general consensus there, and now they have their reason. But remember Peter Schiff said before, he was not talking about raising the Fed funds rate. He was talking about QE4, actually going out and buying bonds, and that's a much more dramatic thing. So,
I already had a bunch of traders here yelling 1 minute. It's like dominoes. I go 1 minute, 1 minute, 1 minute. We're less than a minute to trade. I want to thank everybody very much.